Good afternoon, ladies and gentlemen. My name is Maria Halas, and I'm the CEO of Stride Equity. Stride Equity is a venture-backed investment platform, and we back a portfolio of promising startup companies. Plus, we have a program for early-stage founders to learn how to become investment ready. I'm going to be asking a few questions of our excellent panel today. Thank you all for joining us, guys. So the great thing for me is that I actually haven't met anyone on this panel before, so I'm going to learn everything about them right now. So to start with, I want to learn a little bit about how did you end up in VC. I'm sure a lot of the investors would want to know that. Nick?
Sorry, how did I end up in
VC? You're an orthopedic surgeon.
I'm an orthopedic surgeon, yeah. So I'm somewhat unique, I think. I'm an inventor, I'm a user, I'm a surgeon. I've had quite a few ideas that I've got to market, and like everyone who has an idea, you struggle with funding. Then I started chatting to some colleagues, and they've had the same funding problem. So it became fairly clear to me that the best idea was to get these people together. They're the smartest people in the room, get them all in the same room, and they love to share their ideas. So I set out to start a VC so we could invest in these collaborative ideas and get those teams together, because if one succeeds, we all succeed. So that's essentially how we've got into VC.
Sounds like some of the angel investors around here might want to learn from that. We've got Stephanie, who's also a medico. Tell us about your journey.
Yeah, so I think as well my entry into venture capital is a little unorthodox. So I have the research and medical side of my career, where I went through my bachelor honours and masters and then my medical degree. And prior to that, the research was mostly in neurotech and neurology. And then through all that, I've also been consulting on different companies in the healthcare, construction, and AEC industries, as well as the blockchain industry, which led me into my first role in venture at Airtree Ventures, and then into my current role as an investment manager at Possible Ventures.
Thanks, Stephanie. Mike, unlike these guys, you've been in VC for a long, long time. Tell us a little bit about your background.
Look, originally, first of all, we launched a fund 8 years ago. But I originally got involved in VC in 2006, 2007. After I sold my first business, I ended up cleaning up a couple of companies for local venture capitalists that had come off the rails, and the founders were gone, and basically had to look at the side of what happens when things don't work out as you might hope they might do, and you learn a lot of experiences from that. And from that, I then went and worked for Intellectual Ventures, which had 70,000 patents, $7 billion under management, and learned a lot about IP, spent a lot of time in universities, basically hunting technologies and then turning those into startups.
Thanks. Lawrence, you are with OIF Ventures, and we're really interested in but you're a lawyer originally. Is that right?
For my sins, yeah.
For my sins, yes. Yeah. So tell us about your background, but also start telling us a little bit about what OIF is focused on.
Yeah, sure. So thanks for having me. So my background, so I've been at OIF Ventures since the firm was started in 2016, so 8 years ago. And I co-founded 2 software companies, and we sold one successfully, and then met Jeff, my partner at OIF Ventures, and the plan was to take some time off and think about what I was going to do next. And Jeff, as he does, convinced me to come in for a couple of days, and I haven't had a holiday since. But OIF, we invest in early stage technology companies. We're Sydney based, predominantly investing in Australian founders in seed, Series A companies, B2B SaaS, fintech, digital marketplaces. We manage about $500 million in assets under management across 4 funds. 3 are earlier stage funds, those seed and Series A funds. And one which we've launched is a later stage opportunity fund that is designed to invest in, the kind of cherry pick the companies that have exceeded $10 million of revenue out of funds 1, 2, and 3. Fund one has performed very well. It's 8 years in, it's returned 3x net to investors, and we've still got about 8 companies left in the fund. So that's us.
Mike, Main Sequence is, of course, one of our largest funds, been around for 7 or 8 years. And it's been investing in a lot of early stage, great technologies. But what is your focus right now? What are the 3 or 4 key areas you'd be looking at?
Me personally, or the whole fund?
Let's start with the fund, and then maybe you personally. And you can pick one.
So I tend to do a lot of semiconductor work, a bit of energy work, AI, robotics, and a little bit of medtech. So those are the things that excite me. Funnily enough, I sort of tend to do only one semiconductor deal per fund because they take a long time to do and they use a fair bit of capital. But I've got a multitude of them at the moment, which is really cool. I think if you look fund-wise, we're spending quite a lot of time in quantum and in synthetic biology. Definitely a lot of time investigating AI, and we had some existing AI companies from before it was popular, but we're looking at more at the moment, still navigating a bunch of that area.
I think saying the words AI is really interesting. It's obviously everybody wants to hear about it. And while you mentioned that, I want to just mention the Cut-Through Ventures report that has just come out. I don't know whether the audience has been able to read it, but essentially all the media is talking about, of course, AI, AI-first companies. But the evidence shows that actually VC firms haven't invested that much in it in the last quarter. So maybe you've got a pipeline of companies, I'm not quite sure. But it could also be that by the time something becomes trendy for us, retail investors, it's already gone past from professional investors. But anyway, what's your view on that, Mike?
Sorry, you're going to have to repeat it. I just didn't quite hear the key.
So Cut-Through Ventures came out with its report, and essentially the AI investment, whilst in terms of number of deals, is the highest number of deals in last quarter. In terms of average investment, is still low at 5.2 million on average investment per investment, as opposed to 15 million as an average value for the other sectors. So my point was, why is it that are we lagging behind, or we're already too late?
I don't think we're too late. I think there's an enormous amount of capital going into foundational models, but I think a lot of that is, well, put it this way, they're probably not all going to win, and I think that a lot of the foundational models are being open sourced as well, which means that businesses can actually access them. So I think there's still, put it this way, in the early part of 2000s, everybody was very hot for internet companies. And there was an enormous amount of money spent at that time. And some of those got burnt, quite a bit of it got burnt, but some of it turned into long-term businesses that went on for 20, 30 years. And so I think that we're in that phase at the moment where a lot of money will be spent. Some of that will work out well and others won't. I think locally in Australia, we've had a decent quarter, but not great. And a lot of that was concentrated into a bunch of big deals. Middle of the road, Series A, Series B is looking pretty flat, pretty dead. So
indeed, they seem to think that might accelerate while we're talking about trends. It might accelerate in the second half, given that those companies haven't raised Series A, B since 2021. Would you agree with that?
Yeah.
Again,
I'm really struggling with the sound. I'm sorry.
Sorry. So the report also points out that Series A, B raisings have been lagging behind, which is what your point has been. And do you see that accelerating in the next half?
Look, hard to say. What everybody doesn't really think about too much is why that's happening. And so if we look back sort of 18 months ago, when the world pre-Silicon Valley bank crash, we used to have American VCs flying into Sydney every week looking for new opportunities, and that sort of dried up post-SVB. And so that's a bit of a challenge, and also government funds being, still the two major funds, National Reconstruction Fund plus AEA, are just coming online now. And so there's been a little bit of a dearth there for 18 months of funding sources. You know, if you've got a high-tech company in Australia, you can get the first sort of seed and seed plus round done, maybe the A, but anything after that needs to come from an international investor. There just isn't the depth of capital here. So I think that's why it's happened. Whether that resolves itself soon, hard to say.
Yeah. Stephanie, I want to test you on something else. What is frontier tech? Because your website talks about your investment theme being frontier tech.
Yeah, great question. So at Possible Ventures, we define our thesis as frontier tech, and how we look at that is in two ways. Firstly, frontier in your mission. So are you doing something that's really going to push forward humanity and do something that to really create the future of tomorrow in mission, or is it in your technology? And just a little bit like what Mike does at Main Sequence, we really do focus on deep tech and life sciences, and even software that is making a path to tomorrow, and really doing something new.
And one of the things in the recent second quarter 2024 report that I picked up on was the drop in investment in female founders. What's your view on that, and do you see that changing?
It's a really difficult question to ask, I think, because obviously internally we try to be as unbiased as possible when it comes to investing in female founders, or really any founders of diverse background or identity. And I think at the end of the day, if you are focusing on the project, or I beg your pardon, the company first, and really looking at that founder in terms of competence, then hopefully the gender and background are really not a factor in your in your decision making. And at least if possible, that's how we consider it.
Nick, I think I get this right when I say 3% of orthopedic surgeons are women in Australia. Is that right?
3%?
Yeah.
I think it's a little bit higher than that. But,
maybe.
It's not 50-50. That's embarrassing to say, but it's not.
So my daughter wants to be an orthopedic surgeon.
Oh, very good, very good.
So what's your view on investing in startups, female startups? How do you see that within your medtech? Because you're obviously focused in medtech, where there might be more women.
Oh, sorry. Yeah, no, we're in medtech, and our tech is about 65 million years old. So the bone that you see in the National Museum is the same bone as we got today, and our tech is not going to be regulated out by government or anything else. We're all going to get older. We're all going to play sport. We're going to do stupid things like ride motorcycles. So our tech, I think, is safe, and is safe for the future. So we're also focused, and I think we really want to put a focus on mobility, and everyone can see an outcome with the improved mobility, and mobility really gives you independence. So I think if we can get that investment right and improve someone's mobility, then we've improved our fund and improved not only the investors' return, but improved someone else's life and given them some independence.
So I want to go back to Lawrence a little bit. I want to tease out a little bit about your favorite area. If you can pick one area at the moment, because we're talking about trends in this panel, what is one sector that you really would like to focus on and invest in because you think it's really the strongest in your view?
Where do I start? So we focus on three areas at OIF, and that's B2B, like enterprise software, fintech, and digital marketplaces. I mean, just to zero in on enterprise software, which dovetails a bit about AI and what Mike was describing. We've seen a lot of use cases of AI starting to come through, especially at like almost like the behind the scenes, like OpEx level. Developers can develop faster, more scalably, more cheaply. We've seen AI deployed into customer call centers now. So we've seen that really like lower the cost barrier, and cloud adoption. It's been talked about for 10, 15 years, but it's still being forecast to grow 2.5x over the next 3 years. So there's still a lot of cloud adoption. You'd be surprised by how many companies we speak to, the Fortune 2000, the ASX 200, who are still on a mainframe, still have, critical aspects of their systems running in very legacy technology, and it's really inhibiting. We all use Uber or Netflix and have this great user experience, and then we flip across to the enterprise side and we're stuck in the 90s. And so we're seeing companies being forced by consumer requirements to really start to adopt, consumer-centric software, and that's where we've been investing heavily behind. Sadly, we're also seeing a lot of need for cybersecurity. We've made a lot of investments there. We share one with Mike at Main Sequence called Casada, but XM Cyber, Nullify, and others, EFT Shore, which we sold. But unfortunately, there's just been a big need for investment and for companies starting. And Australian founders have had exceptional success building really robust cybersecurity software. So we're seeing a lot of excitement, sadly, investing behind that area as well.
I think that's very topical with some of the events of, Optus, etc. I think we are Medicare data leak.
Yeah, and for every one that is named, there are hundreds that are unnamed.
Yeah, exactly. Mike, if you could pick one area that you personally are really interested in looking at right now, what would that be?
One area.
One sector or one area?
I'm sort of thinking the intersection of semiconductors and AI. Everybody thinks a lot about LLMs, but not actually what goes into powering them underneath. And so looking at how can we use AI to build chips faster? Because if you can build chips faster and make them lower powered, that's pretty interesting, because one of the biggest issues you've got right now with AI is we're suddenly sort of burning a large chunk of the world's energy on training models. So that's pretty interesting to me. And then how can you massively reduce the cost of building semiconductors by taking away the 3, 6, 12-month cycles of building a test chip, taping it out, sending it back, testing it, building a test, and so on. That takes humans literally tens of thousands of hours to lay out all the transistors, to lay out all the design. That is a task that is optimally suited for reinforcement learning and other types of AI. So that's pretty interesting.
Is it something that you find in Australia from...
I may have. I've been looking for 2 years, I'll tell you in a few
Sounds
weeks'
like
time.
we should have a look into your Rolodex.
Stephanie, how about you? One area you're really passionate about, you really want to look at this year?
Again, it's such a hard question. There's so many promising companies coming out, but a word that I'm really looking at the moment is resilience. And whether that be cyber, as just mentioned, or whether that be improving our structures around energy and climate, or whether that's even in the medical field and looking at stepwise changes to improving health and longevity. I think that there are lots of great options out there, but I couldn't narrow it down for you. I'm sorry.
Nick, you're the last one. Passionate project.
Can I take two?
Yes, go for it.
So I think what we've noticed is that the investors, the younger investor especially, they want to see that they're making a difference. They've got a conscience. So making a lot of money comes second to making a difference. And so my focus and my passion, I guess, for this upcoming investment is two. We've got a plan to help solve back pain. And I think, the world understands back pain. Probably 20% of the room have back pain right now. I mean, it's
More,
remarkable.
I think.
So we're working on a protein to be injected that can help with back pain and help disc disease and prevent the secondary osteoarthritis of the spine. And the second project that I'm really passionate about is ligament reconstruction, and we're using a xenograft, which is a kangaroo-derived ligament, which is much stronger than any other ligament that we know of on this planet. And we're using kangaroo ligament to reconstruct the ACL. And if you look at the Olympics, if we take the Olympics today, and you look at our Matildas, we've got 3 players out with ACL injuries. So 3 players out of that squad with the 1 injury. So I think we can just make that better as well. So two projects, 2 plans, back pain and an ACL ligament reconstructions.
And when you get it done, please let us know. I've got a personal interest in both. all of you invest in early stage companies and early stage projects. And, you know, as an investor, you always come up to risk reward and how do you manage your risk? So if I could start with Lawrence, what are your specific strategies that you use with companies you invest in to mitigate your risks in early stage, particularly in early stage investments?
There are a couple ways. Typically, we're meeting a company once there is a product in market, and we're speaking with lots of, all of their existing customers, or as many as we can, and then also many customers in our network, in their pipeline, getting a really good understanding around the product market fit. There's all the terms that get built into the risk mitigation as well, but ultimately, trying to build a base case that can reasonably say you can 10x the valuation, and then all the inputs there, is the market size, be able to sustain that? Do the economics make sense? The unit economics, spend a lot of time with the founders. Our fund, we purposely keep the fund size smaller so that we can spend more time with the portfolio companies, enough that you get diversification, but not enough that we spread our team too thin. We spend a lot of time before the investment, and then obviously as we get more involved, we build in the network and try and support them. So there's a few ways, but ultimately this is a venture business, and there is risk, and we understand it's not up and to the right all the time, but over the course of the long journey, hopefully it yields a good result. But yeah, it's ultimately a risk business, and you've got to accept that.
So you mentioned that you co-invested with Main Sequence. Do you use that strategy often to kind of use the collective wisdom to mitigate some of the risks?
Absolutely, in a couple different ways. So our investors are exclusively individuals, founders, operators, family offices. We don't have a single institution invested in us, and our team are our largest investor. We use that crowd, which we've curated to really add value. There are ASX execs, founders, operators, different industry sectors, backgrounds. We'll loop that network in very materially in the diligence phase, and then absolutely, bringing in smart value-adding co-investors around the table at different points of the journey, including as the companies expand up to the US, is something we love to do. As long as everyone's adding value and growing the pie, we're very supportive of that.
Mike, I saw in your background that you've got quite a lot of experience mentoring founders. So would you add that to your list of strategies, or that's not something that you do much of at Main Sequence?
Sorry.
Mentoring? Is mentoring something that you do at Main Sequence?
I guess when you look back, all the partners in the fund sort of spent the 10 years before the fund actually mentoring startup founders in their spare time for free. And so, we spend a lot of time on that. I guess just on the concepts of risk there, we go early in a lot of situations. I would say 65% or so of our deals are either we helped create the company or they're still seed situation. And generally, we don't really need somebody to go with us at that point, though sometimes they'll be welcome on the journey. And look, on matters of risk at the moment, one of the big risks is it's really hard to know what the price of an asset should be worth, the valuation, what that should be worth. What it was 2 years ago is very different today. And so you've got a lot of companies out there that are maybe a little bit, they're a bit stuck because they're not sure what the price is yet, and the market's not sure what the price is yet. And so it takes a little while to work that out. And I think, safe notes with discounts and valuation caps help get through that risk situation. So, yeah.
Okay, so you manage it through the terms that you invest in, essentially. Stephanie, what about you? Do you have any specific ways of you looking at risk when you invest? Again, you invest very early. And what do you do when you invest?
I think if possible, we really think that our due diligence is a point of standing out. We really have quite a technical team, and when we look at due diligence, we reference our LP base, who are also often founders or have created things for themselves, or maybe future customers. of the product or the company. And so by really branching out wide and across jurisdictions, we can really have a look at kind of sense checking ourselves, but then also creating a really strong base of research and analysis internally to how we feel. And from that point, I think it really then depends on milestoning out over the next few years, over the next funds, where we expect that to see that investment grow to. And if we're feeling like it's falling short, maybe that just means that we need to help mentor and help lend a hand, or maybe it means that there are different headwinds in place. But I think at the end of the day, it really just comes down to a really smart founder, a great mind who really knows what they're doing and knows about their subject matter. And then we lend all of our support that we can to those people. And at the end of it, we do have the ways that we can reduce risk by creating terms into investments. But at the end of the day, early stage investments, there's always going to be a risk. So it's just about kind of how each fund will classify it.
Nick, what about you? Do you get involved closely with the companies or the projects? I bet you do, just from explanation of what you just said.
I can't keep my hands out of them. So at SoHi, we've got a policy which is, we believe, the best at mitigating risk. So we've got a very strong medical advisory panel and a very strong financial panel, and the paths do not cross. So we understand that the finance guys don't know medicine, the medicine guys don't know finance, and so we have this gateway, if you like, that the ideas come through to the medical team. The medical team can appreciate, well, one, is this going to be of any use in the world? Is it going to change? Is it going to change an outcome? And two, we get the users in the room. Are you going to use it? Is this going to actually be something that we'll pay for? So then once it's passed through the medical advisory panel, then it'll go to the finance team to say, well, has this got financial legs? And that's how we mitigate our risk at SoHi, and I think that's going to be our strength. Well, I hope so.
So I've got one last question. The Cut-Through Ventures report says $1.5 billion has been deployed in venture capital in the last quarter, which is the highest amount since 2022. They show positivity on the market. So I'm going to ask each and every one of you, what do you think is coming? Lawrence?
Yeah, just pull out my crystal ball. It's definitely, I mean, obviously the numbers show it's come up. I mean, there are some significant macro events, a US election, a hot war in Europe, the Middle East, kind of political instability in Asia, interest rates, pretty healthy run on some global indices. Any one of those could materially impact this. Over the 12-month horizon, like, who knows? But what I am extremely confident in is if you can look out 3-5+ years, I mean, the arc of innovation is just accelerating, and there are so many strong tailwinds. Even one that's emerged in full force in the last 12-18 months being AI, which has opened up a $1 trillion market. 12 months, very hard to say, but seeing incredibly green shoots coming back, valuations a lot more sensible, a lot more capital efficient founders and mindful founders around capital efficiency, but incredibly strong tailwinds over the next 3-5+ years.
Mike?
I think if you dissect the report you're talking about, seed is super strong. The top end actually had a couple of really big deals with really large amounts of money. What's in between, the A's and B's, not looking so healthy. And I don't know that that's changing anytime soon. I think one thing that maybe contributed to that is valuations have gone down in that sort of range from where they were 2 years ago. So you might have done the same amount of deals, but there was less money into them. And it's not clear when that really comes back. I think there's still a whole bunch of maybe companies that are still valued in 2022 numbers and maybe need to adjust. But the NASDAQ is sort of at all-time high. Well, it was a week ago. Maybe it's come off a few percent. ASX is at all-time high. We lag by maybe 12 months. VC lags in Australia by 12 months whatever's happening on those big markets. And so maybe to come back. Yeah.
Stephanie, what's your view?
I think we've spoken a little bit about macro, so I won't go there. But what I will say is that on the front lines, when we're talking to founders, I'm not seeing a shortage of really high quality founders and of new things that are developing every day. And I think anyone that invests in deep tech can really see the stepwise changes over time. And as long as we continue to have great opportunities to invest in, there's always going to be a market for them.
Nick, you're the last one, please.
I'm the last, lucky last. So I've got a feeling that when the community is in crisis, the community gets together, and I think what binds us all is health. And I just have a feeling that the community will get behind health, and the medtech will still be strong over the next 12 months. And I agree with Stephanie. The innovation is exciting. It's a great field to be in.
Well, I want to thank you all. Please thank Lawrence, Mike, Stephanie, and Nick for their participation.